Good day, everyone. This is the GTC Traders Weekly Note of November the 20th, 2023. If you are new, this is something that we pull from another firm. I am the senior partner in a separate private proprietary firm, and as many firms do, there is a weekly note, sometimes a daily note. And what we decided to do, to make things quite easy on ourselves, is just package that weekly note up and sort of release it publicly here at GTC Traders. It's just a very simple copy and paste for us. If you are interested in the specifics of the weekly note for this week of November the 20th, 2023, if you're like watching this on the video portion, like on YouTube or somewhere, if you go to all of the information on the video, so right where all the links are at and in the description, you will see a link to the article that accompanies this video entry. That's got all the goodies, right? So if you click on that, by the way, I would say if you do click on that, don't forget over here, we have a subscribe button. You can subscribe with your email and it'll just be delivered to you as soon as we post it. But regardless, if you go to that link, it will take you here. And it's got all of the specifics, basically what's on the calendar for the week, what's happened in the last week in 3-month SOFR, what we see on the Treasury curve, what's happened there, our proprietary sort of look at risk, are we bullish, neutral, bearish, term structures, S&P 500 index, commodities, crude oil, all of that stuff, right? Gasoline. So all of that. Now, if you are new to a weekly note, what's the purpose? What's the reason? If you go to our YouTube page, and if you go to the YouTube page, you'll see the playlists. Click over to the playlists, and you will see a weekly note playlist. Click on that. The first 3 or 4 entries is basically a lot of description as to why many firms, we are not unique, we are not the only ones, but why many firms have something like a weekly note or a morning note, some sort of note that basically coalesces their thoughts together. So you can find that there. Okay, moving on to the vagaries, and that's sort of what we put in these video entries, sort of the vagaries of our thoughts and what's been running through our head. I would suggest if ones are sort of new or aspiring self-directed traders or retail traders, there's this tendency, and we've talked about this many, many times, and we'll continue to talk about it many, many times because we continue to see it, is this hyper-focus on entry criteria. Not even managing the trade once you're in it, exiting the trade, which is probably one of the most important parts, adaptation within the trade, discretion within the trade, how much discretion is within the trade, where does the edge actually come from? No, there's just this massive hyper focus on something that Rob has referred to as red light, green light, right? Where's the green light? Oh, that means I buy. Where's the red light? That means I sell, or I short. There's just this massive hyper focus on it when maybe in fact, that might be like 10% of trading. I mean, I'm just picking that number, but it's a small number as to the import of trading as to entry criteria. You need it. That's why I'll assign it like 10%. You got to have it. But oh my God, you look at some of these new guys and they're just so hyper focused on entrances. I like to trade. I trade in just about every periodicity, right? I do trade day trades, right? Trades that are very, very brief. I prefer, and what resonates with me is longer periodicity. So like 5 days, 15 days. I test a lot of things in the 30-day window. Actually, things become much easier for working with simple data in a 30-day window. But as well, it just resonates with me because I like the time it takes, right? Sometimes 45 days. And yes, there's also, like many folks have, longer term holdings that last years and years and years and years and years, right? Union Pacific's a great example. Medtronic, what else? CME, CBOE, Many of these, Costco, many of these ones have held for years and years and years and years. So, but my point being is if you're going to trade in that, like, I call it the 0 to 45 day window, personally, I find it less stressful. If you want to use the jiu-jitsu metaphor, it's more about just body flow, right? If you're in an intraday trade, you got to be fast, you got to be right, and you got to pick your spots in a very, very specific manner. You've got to manage the whole trade in a very, very specific manner. I do that, but honestly, I find sort of the jiu-jitsu just body flow of 0 to 45 days much less stressful. Oh my Lord. I know some people don't like to have positions. Well, that doesn't resonate with them. It does resonate with me. I can brick something up and hedge it off quite easily. So I don't mind when, carrying positions at all. I find it less stressful. But what I would suggest to you is because of that hyper focus on entrances, I see a lot of newer traders like, oh, I got to be doing something. 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 And it's like, isn't this thing going to last you a while? Then what's the hurry? Like, why are you so stressed? Why are you sitting in front of the monitors at all? If this is a 45-day trade, why are you watching every tick? For decades, I've called that tick fever. If you're in a trade for 45 days, why do you have tick fever and are watching every single tick of the market? That's just stupid. I'm sorry, but it is. Now, you can line up all of our weekly notes and when were we bearish and when we were bullish and on equities, And as a matter of fact, I would suggest that ones do that, right? We put it in the Twitter stream, our thoughts on the economy. What I want to stress is notice how much time it takes. Like, look at equities. When did we go bullish on equities back? Was that the end of May? I think it was the end of May. So that's what, a half a month? We're bullish on equities. And so think about what you were doing for the last 2.5 weeks. All of that time. Would you need to be sitting there if you're going to be in something for 45 days or could be in something for 45 days or 30 days? Do you need to be looking at every tick for the last 2.5 weeks? Think about all the things you've done in the last 2.5 weeks. Then what was our stance on equities in June? Bullish. So now we're talking a month and a half. What have you been doing for the last month and a half? Think about all that time. How much time of it did you spend? And I'm specifically talking more to newer self-directed retail traders, newer guys, aspiring traders. How much of that time did you spend just in tick fever when you didn't need to be? It's a month and a half. Look at the SPOOs. Look at the chart here. And then what about July? Oh, we're still bullish. That's 2.5 months. 2.5 months. What have you been doing for the last 2.5 months? Right? If you're bullish that whole time, just let her go. Right? I mean, it's like the GTC portfolio now. We're starting off with small positions, right? And it's something I got to build. But like lately, it's like, oh, look at that. The market price action's moving higher. Let it move higher. Okay, great. We have no hedges on. Wonderful. Union Pacific, Costco, all moving higher. I've held CBOE and CME for quite some time. They're running. Let them run. I have very specific quantifiable hedging mechanisms. I'm not hedged. Just let it run. The TLT premium we sold, that one we did put in the GTC portfolio. But yeah, we sold put premium. Naked put premium. It's cash covered, right? But it's like we just sold it. You got to wait the time. I mean, the probability of profit now is like, over 99.5%. It's pretty much book profit. I might even close it out at a penny. Just to close it out. But it's only 4 days. I might just let it run for the rest of the time that it's got. But let it go. There's no reason to be watching it every 5 seconds. So that's, TLT put premium, that's booked. We bought 30-day bills. I mean, we bought them on the secondary market, so there's the discounted yield and all of that that you figured out. It's something like 40 basis points. Annualizes out to 5.5 or something like that %. Okay, so that's going to be booked here in a few days. Longs are running, let them run. There's no reason to just be like, if you want to trade in that window of time, just remember it takes time. all those entries that we had up on GTC Traders, it's like, we haven't gotten to the flop yet. We're still pre-flop if we're going to use the poker analogy. I had tons of articles on that. I had tons of articles because it took time. Look at our economic stance in the podcasts and in the Twitter stream and elsewhere. Entries I've put up that it's like, I need to see more economic data. That's taken time. I will say on that front, I am rather encouraged, right? It's going to take time because, as I've said a billion times, I'll say it again here, the Fed may have brought inflation down, but they did the same thing in like 1974 to 1977. They brought inflation down, and then it went nuts. It went wild, and it was worse than before, and the Fed does not want a repeat of that. So we are in that valley. We're in that gully. I will say and it's taken time. What did I say? It's like, I'll need to review the data. I will say when looking at input costs, when looking at economic prints, some things are slowing down. That's good news on the inflationary front. Someone's like, well, aren't you worried about more, deflationary problems? That's what the rate increases are supposed to do, right? Again, look at history. Look at 1974 to like 1977. Look at 1980 to like 1982, right? That's what it's supposed to do. So, but again, I need more time. I need to see more data. Don't get involved in tick fever. When these things take time, just let it take time, right? I find that so much less stress. I have no problem carrying positions. You can, with all the instruments out there anymore, you can almost brick anything up at any moment in time. So there's no reason to stress. So at least I find no reason to stress. But that's all our thoughts. Again, you want the specifics, go to the article. But that has been what it's always been. This has simply been our thoughts, not yours, for whatever the heck day it is. As always, stay safe, trade well, and remember that love doesn't cost a dime.